All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I'm going to do a very different kind of video. So if you're new to the channel, this is not my typical video. I am going to talk about a stock today that I never thought I would do a video on in a million years, but this is a classic example. This is a cautionary tale of why investing in the stock market is so dangerous and why you guys got to be so careful beyond doing your due diligence, just understanding how the stock market works. So I just want to go through this example because what's happened to this stock over the last few years is just shocking to me. And I know a lot of people have probably lost an awful lot of money on stocks like this one in particular, and stocks just like this that don't behave rationally. And I guess that would be my biggest takeaway, right? This is not financial advice, but I can tell you the stock market does not behave rationally, and you've got to understand that or you're going to get destroyed in the market. I'm talking about Carnival Cruise, stock ticker CCL. I want to go through what happened. They recently announced their quarterly earnings last Thursday, and their stock absolutely tanked. They are now trading at a 30-year low. And I want to go through why that doesn't make any sense to me at all. And I'm doing a little bit of a deep dive on this one. So I hope you guys stick with me and take a look at what's going on here. If you're new to the channel, remember to subscribe and hit the notification bell. Also, if everybody could smash the like button, I appreciate it. For those of you who want to join us, you can actually join the channel and become a member. So hit the join button and you get some extra additional content. And additionally, once a week, we do a live stream for members only. So that's on Tuesday. So today we'll be doing a live stream after the market closes. So yesterday this stock closed at $6.85. It was down a couple percent on the day, but that wasn't the big move. The big move was last week. There was a day where it was down about 23%, and that was on earnings. And I'm going to go through why that is just madness. Okay, so first I want to show you right now their market cap is about $8.8 billion. So if I look at a history of their market cap, and this only goes back to 2009, but their all-time high was in 2018. So this was a $51 billion company in 2018. They're now about $8.8 billion. So you can see they're down substantially from just a few years ago off of their highs. Now, obviously, a lot has happened to this company and to this industry. So don't get this confused. I'm not saying this stock deserves to be at high numbers. This is a stock I don't own. I wouldn't own. I'm still not interested in buying, although they're almost taunting me to buy it. My point is this stock's trajectory, what's happened to this stock in the last 2 years makes absolutely no sense at all. And then what happened to it last Thursday or Friday makes even less sense. Okay, first I want to show you what happened so that you'll understand what I'm talking about. I have a blue line right here just under $11. Back in March of 2020 when the world had its event, and obviously that event impacted traveling companies. This is a cruise line, so they all but had to shut down their business. And at the time, it was an indefinite thing. Nobody had any idea when or if this was ever going to come back online. So obviously at that point, the stock crashed and tanked and hit some new lows. By April of 2020, the stock had recovered back to somewhere just under $11. That line where it was at in April of 2020, when nobody even knew if this business was ever going to be able to conduct business ever again, that has turned into a line of resistance now on this stock. But it's worse than that. You'll see here is last Thursday. So last Thursday, they announced earnings after hours. So you'll see Thursday they had a little bit of a rough day, but I just want to show you from that day, they were down 23 to 23.5% on Friday. So that was just a couple of trading days ago. So that is a crash. Okay, so they went below this red line. What's this red line right here? That red line is their 30-year low. You got to go back to 1992. A lot of you probably weren't even investing in 1992. A lot of you might not have even been born in 1992. That's how far back you need to go before you'll find Carnival Cruise trading at this level. So you can see the E right here, that's for earnings. So what was in that earnings report that was so unbelievably shocking and terrifying that caused them to drop so drastically to this new 30-year low level? Yesterday, Monday, it continued lower, so it hit even a lower low. Okay, so they just put earnings out a few days ago. So this was the press release that they put out. I want to go through a few things in here because I want to give you some idea of what happened this quarter. And then I'm going to look at some recent quarters and compare, because the key for a stock like this to me is if a stock is going to all of a sudden drop drastically, 25 or 30%, and hit a 30-year low, there must be some new piece of information, right? You would have to have something that tells you, the story on this stock has changed drastically. What we thought this company was, that's not what it is. and we need to adjust things radically. That's what you would think. That's what would make sense. But that's why I'm doing this video, because it's important for everybody to know that's not how the stock market works at all. Does that make common sense? Yes, that's how my mind thinks of it. I'm sure that's how most of you would consider it. But Wall Street and big money, they do different things. So you cannot rely on big money to move these stocks around in a sensible way. And you need to know what's driving them in order to understand how they're making money, mostly making money off of us. Okay, so I'm just going to read some of the highlights. We start out with US GAAP net loss of $770 million and adjusted net loss of $688 million for the third quarter. That's not good. I'm not here to argue that this was a good quarter. Don't get me wrong. That is not my point at all. But I am here to argue that relative to the last 8 quarters that they've had, I think you're going to see this is by far the best quarter they've had in a long, long time, and it's some of the first signs of life out of this company that we've seen. So the second line, adjusted EBITDA in the third quarter of 2022 was over $300 million. Okay, that is a positive adjusted EBITDA. That is the first time that they have had that since the situation occurred in 2020 where the company had to shut down and all travel shut down around the world. So you would think that that is a good thing, because understand, this is a company that was having EBITDA of negative billions of dollars quarter after quarter after quarter. So now all of a sudden, this is the first quarter they've flipped positive. And on that news, on that spectacular news, the stock tanked to a 30-year low. Okay, what's next? Revenue increased by nearly 80% in the third quarter of 2022 compared to the second quarter of 2022, reflecting continued sequential improvement. This is sequential growth quarter over quarter. So for those of you who follow my channel, you know, I usually cover small cap, high growth stocks. So I very rarely do a year over year comparison, because with a small cap, high growth company, you are expecting some major growth. So year over year growth is not impressive. You want to see sequential growth quarter over quarter, because if a company is in growth mode, they should be growing quarter after quarter after quarter. Well, this is a long established company, but obviously they're in a recovery cycle. So in some ways they emulate that. You want to see them growing quarter over quarter. Well, this growth is stunning. This is 80% growth quarter over quarter. So again, from all indications, if you didn't know otherwise, reading this looks like really a very encouraging report. Now, obviously, again, I'm not going to say this was a good report. They start out by saying that they lost $770 million. 2018, and 2019 were the best years this company has ever had in its existence. So they're now sitting here telling you that pre-sales are starting to resemble 2019 type numbers, potentially even better than that. Third quarter 2020 ended with $7.4 billion of liquidity, including cash and borrowings available under the company's revolving credit facility. So they have some liquidity. That's quite a bit of money, obviously $7.4 billion. This is a company that has been losing a lot of money. However, you can see their EBITDA this quarter was positive $300 million. So from a cash flow standpoint, they're moving in the right direction. They have plenty of liquidity, so I don't think anybody thinks this company's going out of business anytime soon. However, obviously they do have a tough road ahead. I'm going to jump in and just say the biggest problem this company has, and it's just something they're going to have to deal with over time. Because they had to shut down for the last 2+ years, this company has borrowed billions and billions of dollars. They're close to $30 billion in borrowings, and that's giving them annual interest of about $1.6 billion. However, that was all already 100% priced into this stock. That is not new information that came out in this quarterly report. So everybody already knew that several quarters ago. At this point, they're not really going to need to borrow much more money. That situation is not going to get any worse. That is a situation that was a known variable. So that had nothing to do with the price action on this quarterly earnings. By the way, when they were healthy in 2019, 18, 17, we're going to look at this, they were making over $3 billion a year. So, you know, yeah, half of that's probably going to have to go to interest for a period of time. That's a conversation for another video, but again, that was all already known. So there is a path to profitability. There is a path to positive cash flow, even given the extra $1.4 billion in interest that they have to pay annually. I want to look at this quarter and last quarter, but first I want to put things into a little perspective. Before our global situation occurred and these guys were able to do business as usual, this is 2017, 2018, and 2019. You can see on the top line, they were at 17.5, 18.8, and $20.8 billion. So that was their revenue for the year on those 3 years. And then if we go to the bottom line, operating income, you can see they were at $2.8 billion in operating income in 2017. $3.3 billion in 2018 and $3.276 billion in 2019. So you can see those 2 years were almost the same, and they were the two best years the company ever had. Obviously, unfortunately, then in March of 2020, the world shut down. So these numbers changed drastically, and I want to show you just how drastically. I want to compare this year quarter over quarter, but what I also want to do first is show you last year. This is the 3 months ended May 31st, 2021. So this is already a year into, travel being restricted and all those other things. This company's top line in that quarter, for the quarter, was $50 million. That is down 99%. Their top line revenue was down 99% in that quarter. So I'm going to take a break and show you the chart for a minute. If we look at their long-term chart, this is Carnival Cruise on the 1 month time frame. This was May of 2021. I'm going to put a line. So I've added a green line. You can see they were trading at almost $30 at that point. So they're now trading under $7. So back in the quarter where they reported sales were down 99%, you're going to see they lost $2 billion in that quarter alone. Their business was shut down. Yet the stock was trading at around $30. And now all of a sudden, a year later, with revenue almost all the way back to where it was at its peak, we're down to 30-year lows. So fast forward to this quarter. This is the information that just came out. This is the information that came out that caused this stock to fall off the edge of a cliff and hit a 30-year low. Okay, now if we look at revenue, they're now at $4.3 billion. So remember, they were just at $2.4 billion in the previous quarter this year. So there's your 80% increase in revenue. But more importantly, if we look at their direct expenses, they're $3.3 billion. So they're clearing now $1 billion of gross profit. They have not had gross profit, zero gross profit. They've been negative every single quarter for the last 2 years. This is the first quarter they've turned that around, and they've turned around to the tune of $1 billion. So that is a massive jump in improvement in performance. After interest and all the other things, they lost $770 million. But if we look at last quarter, after interest, their bottom line net income or loss was $1.8 billion. So they improved that by over $1 billion in 1 quarter. So you can see from this financial performance, this is clearly not a great quarter. However, the last 8 quarters were radically worse than this, in my opinion. Now, the reason that this stock tanked is that Wall Street's expectation was they were going to have a better quarter than this. So they missed Wall Street's expectations. They missed actually probably their own management's estimates. This is not my type of stock, so I will not be buying this in all likelihood. And I'm certainly not recommending you buy this or sell it. What I'm saying, my point of this whole rant, I suppose, is that you've got to be careful. You've got to do your own due diligence, and you've got to understand the stock market can be unbelievably irrational. So you've got to know what Wall Street trades on, not what makes sense, because by all accounts, this was by far the best quarter this company has had. So again, I'm going to finish up. Please be careful. I'm not recommending this stock. I just wanted to show you an example of what can happen with these companies and how you need to understand how Wall Street is trading. It affects your money and your portfolio. So hopefully this was of some use to you guys. I feel like I had to get this video out. So thanks for listening. If you made it this far, remember to hit the subscribe button and smash the like button. So thanks again for watching. We'll see you in the next video.